Entrepreneurs. Steve Jobs called them the crazy ones. I sometimes wonder what he would call the men and women who bet on them, believe in their ideas, their passion, their tenacity, their courage, and their vision. What do you call the men and women who put their money where their mouth is and bet on someone else's enterprise? We at CNBC TV 18 call them India's angels. India's tryst with liberalization began more than 2 decades ago, but its entrepreneurial ecosystem is far from adequate. Angel investing is just about beginning in India, and angels fear to tread mostly because of legal constraints which make both investing and exits cumbersome. But we are beginning to see winds of change. 2012 was without a doubt the most difficult year the Indian economy has seen in a decade. The world's second fastest growing economy was let down by a weak political class, and the India story quickly began to unravel. While cautious foreign investors pulled back, large domestic conglomerates threatened to look outside. But in the midst of the gloom and doom, there was a small glimmer of hope.
You can build a company in India with around $1 million.
There is this whole Silicon Valley influence, right? So that's also influencing the young startup mentality in India.
14, 15 companies a year versus 5 companies a year on an average tells you the potential and the fast growth that this is going to create.
So let's study Singapore, let's look at the Jobs Act, and let's see how we can put things together to really accelerate the ecosystem.
Being a businessman was almost a bad word.
Differentiation came when we stopped using the term businessman and we started using the term entrepreneur.
Traditionally, rich companies never wanted not rich to get into the rich category, so they never were supportive of those people.
I went through that journey myself. Obviously helps me in helping entrepreneurs today.
No matter how well you're doing on your way, if you run out of money, that's the death of your idea.
Kudos to CNBC TV 18. It is programs like this that will make the people who watch think to say there's something needs to be done and maybe some action will start. That will be the catalyst for making this happen.
So we thought the time is right to bring this small but significant community of investors together to find a method in their madness, encourage and inspire others, and find hope where there is despair.
On the show this week, meet a team of equals at Inventus Capital Partners. Investing in India since 1993, early-stage investment firm Inventus Capital Partners focuses on tech-based startups across sectors. With an average ticket size of $1 million to $2 million in the first round of funding, Inventus claims to have created over $30 billion in aggregate wealth and market value for entrepreneur founders and shareholders. One of the most active VC firms in 2012, it invested in 4 new companies, 3 follow-on rounds, and raised $70.3 million for its second fund. With a portfolio of 18 companies, Inventus wants to create great companies investing in Indian talent, markets, and aspirations.
An entrepreneur has to be above all a salesperson. The entrepreneur who is not able to sell, will not survive for very long.
In 2001, we would quite often see entrepreneurs saying, I think I have this great idea, will you fund me, then I'll leave my job. I think those things have gone. People are coming out, willing to take the risk and get started.
I do not have a natural tendency to interfere. As I like to say, tell my entrepreneurs, 80% of the time, I don't think the battle is worth fighting.
Apart from than their passion for investing, what Sameer and Parag also have in common is an MBA from IIM Bangalore.
My enduring memories of sports are two. Football, where I saved a penalty and redeemed myself, and hockey, where I let a goal go between my pads, which were Cardinals.
I was kind of, I don't know. I went into IIM thinking that I wanted to be a finance guy. Marketing somehow I ignored. I passed, I got a B, but I didn't internalize anything. I thought it was a flippant subject, which it is not, obviously. So.
But it's not just their alma mater that binds this group together. The glue really is their passion for all things tech, a passion nurtured on IIT campuses in Bombay and Delhi.
There's one thing common between three of us, we are all IITians.
But Delhi is better.
I think that's a starting point. I am not a details person. I am a big picture, but I was not the person who would be able to negotiate a deal, write the term sheets. I am very aggressive and optimistic in my thinking. Sameer is probably more, even-tempered. Parag and John are a little bit more realistic, and yeah.
If I were to say what Kanwal looks for in a business, I think he's basically evaluating the entrepreneur. What Sameer, I think, brings to the table, for example, is a vast network. He's very well known in the startup world, and that is a very good network to have. My approach to business, given my training, has been through the numbers side. So I understand operations from the numbers side.
So if I were to add, I think Parag is very clearly able to identify and prevent us from getting carried away. So for example, when the e-commerce hype was happening, I think it was Parag's vast experience that told us, I've seen this movie before, this will stop, this music will stop, and we'll be left without a chair, and that served us very well.
But this is not to say that Inventus doesn't invest in the e-commerce space. In fact, one of its most successful portfolio companies, Redbus, is an internet e-commerce play, and that investment was made when no one else was biting.
Launched in 2006 by a group of software engineers with the idea of computerizing the bus industry, online bus ticketing portal Redbus is today one of India's hottest startup stories. The company received its first round of funding from Seed Fund. Inventus closed its second round of funding.
There was tremendous interest from various investors in investing in Redbus, but suddenly Lehman Brothers had collapsed, and all those investors who had shown a lot of interest in investing suddenly disappeared. And in fact, the second round of fund, we didn't have much choice. I mean, there was only Inventus which came forward, and that too, I think, because Kanwal Rekhi is known to invest in bad times.
I recall the Redbus meeting, Kanwal, after we first time met Funny and he formally pitched to us. We were driving back, and Parag kept saying, this is something we have to do. This is a two-sided network business. This is like the fax machine. This is, and he almost sort of, you could see the excitement in his veins.
We have some great examples in Chetan and Funny of very intellectually honest entrepreneurs who will by nature send out bad news before.
Yeah, I'll tell you, this is the other trait. The bad news out quickly. Good news and wait. The entrepreneur who gives you the good news and holds the bad news is a bad news. Because, yeah.
Just to illustrate the intellectual honesty point, I was having a discussion with somebody yesterday about whether we should put this particular item in the P&L statement above the line, meaning before gross margin or after gross margin, etc. So I was telling him, okay, fine, you deceive others. That is fine, because it is after all a buyer beware kind of a market. So deceive others, but the moment you start deceiving yourself about variable costs, you're doomed.
The team at Inventus receives close to 1,300 plans every year, and they say they make it a point to read every single one of them. So how do they sift the grain from the chaff?
Capital efficiency is important to us. We have this belief that if a company takes in too much money, then the likely outcome is unlikely to be so high that you will make the 10x returns that we are looking at. I think that is a key criteria we use going in.
The other thing I'd like to see, entrepreneurs playing in a market which are new and emerging rather than a me too Very, very hard to be a second or third player in the marketplace and do well.
Making the connection with the entrepreneur is crucial, and the Inventus team tries to meet as many as possible, and this is where the real test begins.
I think the good interactions that I've liked or continue to like is where an entrepreneur understands his business very well. He's very open and in communicating that business. I almost always get upset if he says I have no competition, because to me it is an indication that he hasn't understood his market. So entrepreneurs who are very open about their competition, discussing even the superior features of their competitors, is something I like. If they've had failures in their past and they bring it out, that's also something that I like. What rubs me the wrong way is people who come in expecting that, or as an entitlement, you have to fund me, and what the hell do you mean by saying that you can't invest?
I don't like the entrepreneurs who blame others. Failed because my VP of engineering didn't get the part right, or it failed because my angel investors and VCs pull the money. So somebody who's always blaming others as entrepreneurs, I just hate those people.
And maybe the guy who's left his job, and we don't want an entrepreneur who's very cushy and doesn't want to take the risk, wants a company salary, etc. So some sacrifice on his part is something that we also look for.
Who's looking to be an entrepreneur, not to find another job, as somebody described it.
Yeah. Two other companies Inventus has invested in, CBazaar and eTechies, have made bootstrapping a virtue. CBazaar.com in its first avatar is ChennaiBazaar.com was launched in 1998. It survived the dot-com bust of 2001, built its business and waited for 13 years to raise funds.
The question was, guys, we are investing in you. Okay, so if you guys are comfortable about what you're going to do, then I think let's talk about it. And that's where the start happened. So, that made us comfortable that, they want to invest in the promoters and founders rather than understanding what the business is and then moving forward. So that gave us a comfort area that, there is someone who's relying on us and is going to trust us.
A team, B idea is better than a B team, A idea. So I think that all of us believe in consistently, because markets change, things happen, and A team will respond, B team doesn't, or slow in responding, not good at responding. So team is the most important criteria. After that filter is passed, you come to the market space.
And the team was what they invested in at eTechies as well. Established in 2010, eTechies is the first organized player in the post-warranty tech support and repair market for PCs and tablets.
Expectations on sales? Okay.
Rohit Chaudhary of eTechies says they were asked tough questions about their expansion plans, but it was their commitment to the business that convinced Inventus.
Thank you so much. I think in our case, before a VC actually came in, for good 22 months, the founders had not taken one penny from the as a company. So it was a great, exhibition of commitment, conviction, of standing up and saying that, hey, listen, we are going to do it. And we've actually done pretty well if you look at it. Even post Series A, as a company, we have grown 400%.
On that note, it's time for us to take a break on India's angels, but coming up next...
To invest in India, we have to go to Mauritius. Why not give me a tax-free option straight?
I wish as an industry we wouldn't be like a herd that just goes from one side to another side and just follows each other.